Hey, what's up guys, Krishna here, and today we're going to be going over my top 5 stocks for the month of May 2021. Now, I've spent the last couple weeks really researching these and analyzing them, and honestly, I feel like these stocks are some of the best buys that you can get right now. Be sure to watch all the way through the end for my full analysis because I'm going to be looking at some of their recent news, some of their financials, and then some of the reasons why I expect these companies to have huge growth in the future. And if you enjoyed this video and maybe actually agree with some of my stock picks, don't forget to drop a like down below and subscribe to the channel. It's free and you can always unsubscribe at a later time. But anyways, let's go ahead and get right into it. Now, the first company I'm looking at is called Taiwan Semiconductor Manufacturing, ticker symbol TSM. If you have an iPhone, a Ford Mustang, or even just an AMD CPU or GPU, you're probably using semiconductor wafers that have actually been built by TSM. Semiconductors nowadays are essential for every piece of modern technology and really allow companies to elevate their software and hardware. Now, currently, Taiwan Semi is one of the largest semiconductor manufacturers in the entire world, only falling behind between Intel and Samsung. And honestly, with some of the investments that Taiwan Semi are making right now, I honestly think that they could actually pass them in the really near future. Now, unlike some companies that have massive market caps but barely make any revenue, you know who you are. TSM is a money printer, making over $1.34 trillion of revenue in 2020 alone. Now, off of that $1.34 trillion in revenue last year, over $711 billion of that was actually profit, meaning that they have a 51% profit margin. Now, from 2019 to 2020, revenues for this company actually grew by 25%. This year, 2021, the company is expected to raise its revenues by another 25%. However, I don't really think that expected growth is really priced into the stock price right now, which means that there's a lot of potential upside for us. The company has around $600 billion in the bank with only 370-ish billion in total debt, meaning that they can really pay off their debts with a lot of money to spare. It currently has a price to earnings ratio of around 32, which is a little high compared to its competitors, but it does pay a dividend of around 1.47% a year. So for those of you guys who value high growth companies with a dividend, I think TSM could be for you. Now, looking at the last 4 months, the stock price has been relatively flat. It hit a high of $142, but then fell back down to $107 when the market sold off in February. Although it is up 100% from last year at this time, chip makers and the whole tech industry as a whole kind of ran, really raising valuations for everything, and TSM obviously was no exception. Now, right now, electronics manufacturers as a whole are actually suffering from a semiconductor shortage with COVID-19 last year, and actually some of it this year, really impacting a lot of these companies from manufacturing, backlogging millions of orders. Now, in order to capitalize on this massive chip shortage that we have this year, TSM has pledged to invest over $100 billion within the next 3 years in new factories. Now, these new factories would be able to increase their chip output by a ton, and this would raise not only short-term profits, but actually long-term profits as they continue to take more market share away from companies like Intel and Samsung. Keep in mind that Intel, on the other hand, actually only has pledged to invest only $20 billion. So TSM is literally investing over 5 times the amount of money in really new factories. I think that this massive difference in investment is really what separates TSM from its competitors, and I actually look forward to seeing this becoming a $1 trillion company in the future. The second company on my list is called ACLS Technology, ticker symbol ACLS. Now, this is an American manufacturing company that builds semiconductor machines used by semiconductor companies to build their chips. They also provide aftermarket parts, tools, and even give training for companies that use their products and have a pretty highly rated customer service. Now, looking at their numbers, ACLS is currently trading at around $45 with a really low market cap of just $1.5 billion. In 2020, their revenue was $474 million, up about $132 million from 2019. Profit was at around $198 million, which gives them a good 42% profit margin. Now, this year, revenues are actually expected to grow by 25%, something that investors might seem really attractive considering the company has relatively stayed the same for the last 3 years. Since 2018, ACLS has really struggled with increasing their revenue past $400 million. However, during this time, they've actually increased their profit margins pretty significantly. However, I think that if they can actually, reach these 25% revenue growth this year, a lot of investors might gain some renewed confidence confidence for the stock and actually start entering it. The company has $203 million in cash with only $143 million in debt, so once again, they can pay off their debts with some cash left over. Right now, they have a price to earnings ratio of 29, which is a lot less than the semiconductor manufacturer average of around 41. So what this basically means is that the company overall is undervalued compared to a lot of the other chip machine manufacturers. They also have a 10.4% return on equity and an 8.7% return on assets, which is pretty standard for a lot of these chip manufacturers, showing that they do have a lot of stability that the others do. Now, moving over to the stock price, ACLS is up 50% in the last 4 months, hitting a high of about $50 and then falling to around $41 at its recent lows. So while 50% growth in the last 4 months does seem quite extensive, a lot of this bullish sentiment is coming from the vice president, where he actually put out a statement talking about a new product extension, which in his words said will increase our footprint and drive ACLS towards our $650 million target business model. As chip companies continue to build new factories to keep up with the increased demand of semiconductors, many of these companies might actually start using ACLS machines. Now, as ACLS machines start becoming more powerful and efficient, which they actually have been considering the amount of money they've been investing in research and development, we could see them start taking away a lot more market share from their competitors. Right now, ACLS only has around 2.3% of the market share, meaning that if they were only really to double their market share with their new powerful machines, they would honestly double as a company, and we could see a real rally within the share price. Now, personally, I believe that ACLS is really turning a corner this year, especially since their vice president seems extremely happy about some of their results and some of their products that they've been shipping out this year. Okay, so the third stock on my list is a company called Vizio, aka VZIO. Now, if you live in America and have went TV shopping or soundbar shopping for the last couple years, you probably might have seen a lot of Vizio TVs and soundbars really hung around everywhere at Best Buy, Walmart, or even Target. Now, in comparison to some of their competitors like Samsung, Sony, and LG, Vizio products are seen on the cheaper side, but I actually think that they give a lot of value for their price. For example, I actually think that it's really great to invest in companies and brands and products that you use on really a daily basis, and me personally, I have 2 Vizio TVs and I honestly wouldn't really switch them out for any other brand. Now, let's take a look at some of their financials and numbers to really get a reason as to why this stock is such a good buy. So Vizio really only has been on the stock market for around a month since its IPO on March 22nd of this year. Opening at $19.30, it quickly jumped up to $25.90 before eventually finding its footing between $22 and $24 for the last few weeks. It has a market cap of just $4.3 billion with over $2 billion in revenue in 2020 and $296 million of that being gross profit. Both revenue and profit is growing, with profit being up over 80% year over year. On top of this massive increase in profit, the company has over $770 million in cash and only $625 million in liabilities, so they can really pay off their debts with honestly no issue. Now, there's a couple of reasons why I do think that Vizio could be a solid gainer in the future. Now, because there were simply so many SPACs, IPOs, and direct listings on the stock market during March, including the Coinbase direct listing, I feel like a lot of companies just simply got swept under the rug because they just weren't as popular, like Vizio, for example. And this kind of has me feeling like a lot of investors don't really even know that Vizio is now a public company. Name recognition and personal connection can actually play a pretty big part in the way a stock is valued, and since a lot of Americans actually own Vizio TVs and soundbars, I do believe that they'd actually be willing to invest in the company since it's probably something that they use daily and actually love. So apart from just selling TVs, Vizio actually has another business model where they partner with many ad-supported streaming companies, and they basically get a commission when anyone signs up for a streaming service on their TV. Its SmartCast operating system really allows you to connect any sort of device or software or app to your TV, and this has actually been competing with Roku and Amazon Fire TV, which have been 2 of the leaders in the smart TV sector. CEO Adam Townsend said in an interview that one of the primary addressable markets that we're focusing on for our future growth is in fact television advertising. So while the profit margins on Vizio's TVs are small simply because they sell TVs relatively cheap, I guess their hope is that they'll eventually have a TV in the houses of every single American, and then once they actually have those TVs, they'll use SmartCast as well as their ad-supported streaming services to basically make the majority of their money, as well as I guess the SmartCast signups for things like Netflix, Hulu, and Disney+. Personally, I actually believe that this is a fantastic business model because when you buy a TV, you only really buy a TV maybe once every 2, 3, 4, 5 years, but a lot of these streaming services that they are connected to, really you have to pay them every month, or if you get lucky, you get to pay every year. This means that Vizio will get a bunch of money up front when you actually buy a TV, and then they'll continue making money off of you as you continue to use the TV. And since the SmartCast software is honestly very intuitive and works great with almost any product, you'll start falling in love with the TV and really just start using it a lot more. Just to jump back into the numbers real quick, in 2020, SmartCast actually increased their total number of users by 61%, and that number is actually about to grow the same this year. And although their streaming business is still relatively new compared to the company as a whole and only really represented 7.2% of their revenue, it was over 38% of their profits just last year alone, meaning that if they can actually continue to build up this streaming business, this could really be their main moneymaker over their TVs. As more and more of these streaming companies continue to pop up every day and actually dominate against regular standard cable TV, I think that Vizio will be one of the largest gainers simply because of their strategic partnerships that they're building with a lot of these streaming companies. Okay, so the fourth company on my list is Advanced Micro Devices, or AMD. Now, AMD is a semiconductor company that builds semiconductors for both large businesses and consumers, and really has become a fan favorite as well as a favorite of mine over these last couple of years. The company has recently become a leader within the PC industry, and it's actually been dominating with a lot of innovation over its competitors. The stock is currently trading at around $85.50 with a market cap of over $102 billion. Revenue was $9.76 billion in 2020, a 45% gain from 2019, where revenue was around $6.73 billion. The company is extremely profitable, generating $4.3 billion in 2020, which again was a 51% increase from 2019. Now, while AMD has been affected by some of the semiconductor shortages, revenue is still expected to grow by around 35%, a gain that I really don't think has been actually seen in the stock price yet. Looking at the chart and taking a look at the last 4 months, AMD is still down on the year, opening at about $95 and then falling to a low of $75, where it's slowly been climbing back up from. Now, this consolidation period really makes me think that AMD is setting up for another run, especially once these chip companies get right back on their feet after the semiconductor shortage is over. Now, in the last few years, AMD has really been killing it with their hardware. They've actually been making better processors compared to Intel, and they've even really been rivaling NVIDIA with some of their brand new graphics cards. Comparisons between Intel and AMD's newest generation CPUs show that AMD's processors are better in every single metric, from power output to price. So not only is AMD killing it in the GPU and CPU game, but they actually recently took a jump into data centers. And if you guys didn't know, data centers are probably one of the most profitable areas that a tech company can be in right now. And if done right, AMD could really see their profitability go literally to the moon. Now in 2020, AMD actually grew their data center business by over 176%, a number that actually seemed to scare a lot of the top executives at Intel. Now, as of right now, AMD only has a 7% market share in the total data center industry, and they're actually expected to double that 7% to 14 or 15% within the next year or two. Now, honestly, I don't really have any bad things to say about AMD. I think that their CEO is doing a really good job of just straight up growing the company. They're making great products. They're getting into areas that are very profitable. And honestly, this is a stock that you just buy and literally hold on and just literally watch it grow in value. Now, the fifth stock that I'm looking at is called Palantir, ticker symbol PLTR. This is a company that specializes in deep data analysis. Right now, it's actually being used to track COVID-19 infections and uses deep data to figure out where the next infection zone might be and really how to prevent these infections from actually happening. Palantir has actually been considered to be one of the most powerful tools for businesses to conduct deep data analysis, and has actually gotten a lot of government contracts recently, which, if you guys don't know, can be extremely lucrative. Now, looking at its financials, Palantir is currently trading at around $24 with a market cap of about $42 billion. In 2020, its revenue was around $1.1 billion, a 25% increase from 2019 and a 50% increase from 2020. In 2021, revenue is expected to grow by about 30% and profits are expected to grow by about 35%. Now, looking at its price to book ratio, it trades at about 8.28, which is pretty standard for a lot of companies in the big data industry. Now, looking at the stock price, Palantir actually has been a pretty volatile stock for the last couple months. It was listed on the stock market at around $10 in October, rising to highs of over $45. However, after the big hype pump that really brought it to $45, the stock has consolidated quite a bit, and it's been hanging around $21 to about $25 for the last 2 months. After, of course, such a massive pump and then a dump and then a stabilization, this usually means that if we get a good ER report or maybe some good news, the price could actually start moving right back up again. Now, over the last few months, Palantir has gained a lot of notoriety for some of their more lucrative government contracts, recently securing a $90 million government contract with NASA. Now in 2020, Palantir had over $150 million in government contracts, and that number is actually expected to grow this. Now, as these government contracts begin to grow, the offers actually become more lucrative, meaning that per contract, Palantir will actually end up making a lot more money than they are right now, which is really good for the profitability in the long run. Also, simply because Palantir has a major grip on big data analysis, I don't think that the government will stop using them anytime soon, and I don't think a lot of the big businesses that use them will stop using them soon either. So while the stock price actually might waver pretty significantly in the short term, I do think that long-term Palantir is a buy, and a lot of stock analysts actually believe the same. In fact, on a lot of these Palantir drops, Cathie Woods, the investor and creator of ARK Innovations ETF, has been buying a ton of the stock. So all in all, these are some of my top 5 stocks for the month of May 2021. Now, I do feel like a lot of these companies have a ton of room for growth, and while this growth might not happen this month, I definitely think that this can happen in the future, within a couple months, within this year, or a couple years. Now remember, I'm not a financial advisor, so don't take my words with pretty much anything else other than entertainment value, and I recommend that before you guys buy these, or really before you buy any stock, make sure to do at least like an hour or two of research, just to make sure that you really know what the company does, if their CEO is good, if their board is good, and if their financials are good. So once again, I hope that you guys did enjoy this video, and of course, if you did, make sure to drop a like down below and subscribe to the channel. I'm gonna make a bunch more videos like this, and I guess just a bunch of videos on stock market as a whole. So if you enjoyed, remember, drop a like, subscribe, and I'll catch you guys in the next one. Peace out.